Hi, you wicked. I just wanted to just say a few pointers about this trade and that, because the thing is, you had a good trade, but you just held on. As you know, you've already you held on to it and you missed out on taking profits. But I was just thinking, just some things you could have done to manage the trade, also that would have told you to get out of this trade anyhow. There was some warning signs to get out. Plus, you could have managed the trade a bit, moving targets and that, moving stops down, like trailing the stop. Anyhow, I'll go to the chart and just show you what I was talking about, what I want to show you. Um, Here's your chart here. Basically, that's it. That's it there. What you've got here, what you've put in the forum there. Here you took an entry here with the red arrow is good entry. It's a retrace of that. Retrace of that fresh supply, and that's a touch trade off to a fresh supply there. Now you've gone down. Now you've got a good $30 out of that, or $28, $29. The thing is, the price has trailed down. Now you've had your target down here, I think somewhere. It's just missed it. But the thing is, it's virtually reached target. Now, if I'm going to flip to another chart now, different. It's the same time frame, but just a bit clearer, so you can see things, because with these bars you can't really see it against the background. So I'm going to flip to this chart here. Now this is the same chart, 4 hour. Now your entry was here. There's your entry there. This one here. Just put an arrow there. Right, there's your entry. Now, if you see here, you've got a 4 hour demand, this grey box here, 4 hour supply, I mean. So you've got a daily supply, sorry, my mistake again. Got a daily supply, now you've got a daily demand. Now here, your price has actually gone and reached target, what you could have expected out of this trade. So it's actually reached the target. Also, if you see price, what it tends to do, it tends to go back to the source of the move. So this was the source of the move up. So price is coming back down to the source. So you've got this whole area here was like the source. This area here. This is the main source, but here, whenever you see price just shear through supply or demand area, there's a good chance when it comes back the second time it's going to react. So as you can see here, second time it's come back, it's reacted to that area. So there you're virtually at target. Now just some warning signs to tell you to get out of this trade. We've got a bullish engulf. That's to me that's like I've learnt from the group here. You got to, as soon as you see a bullish engulf, be wary, because there's a good chance it's going to change trend now. So you could have got out there the next bar if it took out the high. Also, again, you got another pin. This bar here, this strong bearish bar, has gone down, but it hasn't even broken the lows here. So that would have been sort of a warning sign to me as well. And then it's just trickled up and made a nice pin bar here, reaction here. Just trickled up. Also, you've got stacked demand here. You've got demand here, and then you've got a stacked demand on top. That there is another sign that the trend's going to change a bit now. It's going to change again. So you got that. Plus on top of that, you got your daily demand. So you've got a 4 hour demand, then a stacked 4 hour demand, and then you've got a daily demand, and they're all on top of each other. So that's making that a really, really strong area. Now for managing this trade, so that to me, those signals you could have got out there, or the pin bar, the break of that pin bar, you could have got out there. So you would have made yourself some good pips there, just in itself, even if you lost a bit down here, you would have done well there. And then just for managing the trade, as soon as you see something like this, you want to manage the trade, or even, I don't know about you, I like to get to break even as quick as possible. I don't like losing much money. So your entry was here, so you could have had some like some reaction areas. You could have put in some get this to work. So your entry was here, so you could have dragged a stop. You could have dragged a stop down to these reaction areas here. So my first placement would have been here, if any. Here you got your reactions here, resistance, reaction, resistance, all these reactions here. So straight away you're off break even. Now that's after this liquid bar. You would have seen a strong liquid bar move, so I would have moved it down straight away. Because it's a strong move, you think, oh, maybe it'll go further, but bang, it's hit this brick wall here and stopped in its tracks. Now, as soon as I've seen this is where you want to start tightening up your stop again. So now you think about down to here, all this reaction across here, and then it's gone up. So now, if you've seen it's breaking, definitely broken the high here, and it's actually broken through these lows. You want to think about maybe dropping it down a bit more, and to maybe to this here. That reaction's there, but obviously you might have just been stopped out, or maybe it's still in. So you've got, in the end, you've got maybe, oh, you got $13 there, $13.50, just there. So that was a way of managing the trade and that. But as soon as you got this pin bar, you could have just straight away brought your stop down again if you've missed it to there, off these lows here, off the reactions here, across here. You got a lot of reaction across there, so you could have brought it down to there. Then bam, stopped out. So at the end of the day, this is a really good trade you took, but obviously you know you just hung on to the trade. But this just ways of managing the trade, and also just to be wary of these signals here that'll tell you to get out of the trade or to tighten your stop to trail it down. Hopefully that'll help you a bit. Okay then, cheers mate, bye.